Welcome to the Bill Levinson Experience, a motivational podcast relating to the insurance brokerage industry and business in general. And now, here's Bill Levinson.
Okay, welcome everyone to the Bill Levinson Experience podcast. Here we are, episode 55 officially on December 23rd, right before Christmas, Hanukkah, New Year's, and hopefully, and the point is, I want all of you, and I know we have a range of listeners now, used to be all over the country, now it's global. Come out January 1, 2025, running and gunning with new ideas, new strategies, new nuggets. And don't forget these things. Write them down, use a notes app, okay? So you can go back, use this for reference, and then start to strategize and leverage new ideas and platforms and lead programs. So that's the name of the game. I know we have a lot of licensed agents, health agents, financial advisors, CPAs, we have estate planning attorneys, we have friends from the gym, from the car events, from my networking groups. But again, the name of the game is to make sure you're inspired, motivated, and you are doing great come January 1, 25. So we have an exciting guest speaker today. He is our, in my opinion, the top annuity consultant, Coach Chris. Who, number one, I'll just say a few things about him. I'll toot his horn for a second. When it comes to annuities, when it comes to marketing annuities, when it comes to carriers and product selection and the environment that we're in, there is no better resource, annuity coach, consultant, call him whatever you want. But I go to him for everything, okay? And he is on our quarterly webinars that we host. Every 3 months, Chris comes on live, talks about the latest and greatest, and our agents love him. And what's so exciting for us is he's not tied to one specific carrier. So it's not like he comes on and says, oh my gosh, Equitrust is the greatest thing since sliced bread, and their FIA products are the best. And of course, our Equitrust VP is going to say that. But when it comes to Coach Chris, our annuity consultant, he looks at every product and carrier, the big picture, the landscape, if you will. So that's why he is so valuable to us. And that's why I invited him to this final episode of 2024 to talk about what's going on in the industry. So Chris, I just want to start off by thanking you for taking the time. So I appreciate you spending the next 45 minutes with us today on this Monday afternoon. So we appreciate you.
Absolutely. Thank you so much for having me on here today. Close to the holidays. So good stuff, man. I consider you family. So here we are spending time together here this week.
Yeah, no, always. And we have a long history, just so everyone is kind of in the loop here. We go back about 10, 15 years now. And again, you know, this industry is all about trust and working with the right people and relationships. And when it comes to Levinson Associates and Coach Chris, there's nothing, it's like family. It literally is like family. There's nothing better. So what I want to talk about quickly is we're seeing a lot of movement in the industry. We're going to dive right in here. And, you know, there's some carriers that just recently that were in the press and they had downgradings, and there's been lawsuits going on, and I won't even mention the carrier names. But there's good, there's bad, just like every industry. And, you know, I think it's important to know the facts, and as an agent, to know what to look for with the right annuity company that you are representing and you're bringing up to your clients, because they're trusting you, right, to do your due diligence. So there's a lot of movement on that side. There's also a lot of movement on the FIA side, on income riders, on, you know, new sales ideas for the new year. So there's so much to talk about. And then when you think about, we have our rookies, right, that never even sold an annuity before. And then we have our annuity veterans. and I know you're listening too, and you're saying, I want to learn something today. Tell me what I can use in 2025 to make more sales, help more clients. So we're going to talk a little bit about everything today, and there's going to be nuggets for both sides. Okay. Even if you've never sold an annuity before. So what I want to talk about quickly before we dive into our third question here, or topic, is I want you as an agent just to take a step back and think about this for a second. So we have over 24,000 agents in the US, okay? Almost every city, literally almost every city in the country, even Hawaii. So think about you're a life insurance agent, okay? And I'm gonna say, put yourself in my shoes, right? You're an agent now. You're an IMO, right? Since 1972, we market over 100 life and annuity carriers, and about 10, maybe 8 to 10 years ago, we started to market annuities. We were always known as the life shop, okay? And again, put on your IMO hat here if you're an agent. So we were always known as the life IMO, the go-to, the top 10 since day one. And I said to myself, we have a lot of agents out here that are selling annuities, okay? So instead of just saying, you know what, I'm going to refer them to another IMO, I started to say to myself, you know what, we need to build an annuity platform. Okay. Because you don't know what happens when you refer these agents out to another, let's say, annuity IMO. No one's going to treat your agent like you do, as you know. Okay. And again, I want you to look at this as a street agent and an IMO. So there's two sides. So here we are about 10 years ago, and I teamed up with an annuity IMO. We started sending him referrals, and I would say, oh, Bill Levinson, the insurance agent, needs an annuity quote. And this guy would handle our agents. Okay. So we started bringing in a lot of business, more than I thought. Okay. And my numbers, because I figured based on our statistics and reporting that about 40% of our life agents were appointed on the annuity side with another IMO. So meanwhile, that number was actually very conservative. So here we are bringing in all this annuity business and applications, and it's going to another annuity IMO. So after a couple years, I'm scratching my head and I'm saying, wait a minute, I don't see this case in our system. I don't see the override on this case. I don't see that the agent was paid on a certain case. And I said, we need to take this in-house. Okay, here we prove the concept. Okay, right? Just think about this for a minute. We proved the concept over and over. It was like a 2.5 year period. Why not bring in a person or two or three, handle everything under one roof? Okay. And by the way, I mean, it wasn't easy, right? Because, it's basically like building a new business under one roof. So we put the pieces together, put the resources together, hired one person to head this up. And then fast forward, we have the Levinson Annuity Department that was born. Okay. We teamed up with Coach Chris to help us through all of this, who I've known, like I said, for years, even before this time, and built our own annuity division. And little by little, it started to take off. We brought in another person and another person and another person, just focused on annuities under the Levinson umbrella, if you will. So now here we are, 2024, we have a record year. Most annuities sold by our agents in history for Levinson Associates. And I'm very proud to now officially say we're a life and annuity IMO. So here's the point behind the story. You, as the agent, need to look at this the same exact way. Maybe you're a life agent. Maybe you were referring that business out to others. Okay, maybe you heard back from that agent. Maybe you didn't. You hoped the consumer was taken care of, but you didn't know until you followed up. Or maybe the consumer just kind of disappeared, right? And next thing you know, they're buying all their insurance products from the agent that you referred the business to. Point is, you need to handle everything in-house. And with our resources, with Coach Chris, with our trainings, with our technology, with our lead programs, there's no reason to not start writing and marketing annuities, especially for the new year. So That's my point to all the greener agents. Okay. The proof is in the pudding. And they say, it's never good to be a master of all things, focus on one or two or three things, be the best you can. But I believe this falls under the same wheelhouse. So hopefully you're taking this serious. I love the story, and it changed the way we did business forever. So anyway, look at the same thing on the micro level. And I know that you will make waves out there when it comes to making these annuity sales, because your clients are buying them, obviously just not from you unless you're focused on that side. Okay, switching gears, enough of my ranting. What I want
That's
to
great.
yeah, no, I just think I was thinking about earlier, Chris, and it just relates to exactly what we're talking about today. And I don't know. I just think it's time for our agents to dive in and move the needle when it
That's
comes
exactly
to
it.
annuity sales. And we make it so easy for them now. So
Yes, you do.
and
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 why
and for
dip
the
your
the
toe in?
veterans,
Dive
right?
in,
You're
right?
probably listening to this saying, Bill, I did this 22 and a half years ago and I'm crushing it. Okay, great. Well, what are you going to learn today, right? So let's jump in here. Chris, if you don't mind, let's do a look back, 2024 versus what's to come in 25 when it comes to the industry.
Absolutely, Bill. Yeah, I mean, I love so many of your points. Don't dip your toe in, just dive into this and make it just a part to be diverse with here, and it really can help grow that business. And if you're looking back at 2024, wow, it has been a record-breaking year for a lot of reasons, and it's just been so exciting to see this type of growth happening with the carriers, with different agencies, with agents. It's been exciting to see. I have a few numbers here I want to share. I'm just going to read these numbers off here. I mean, Limera came up with their statistics here for Q3. They don't quite have Q4 yet, but total annuity sales grew 29% year over year in the third quarter of this year. Total annuity sales, 29% year over year in Q3. That is the 16th consecutive quarter for growth, Bill. 16th consecutive quarter. Think about that. That is outstanding growth that you are seeing in the fixed annuity space here. They
Unreal.
also, it's unreal. And they said in the first 9 months of the year, sales increased 23% total. So that means in the first 9 months, I just gave you 29% there year over year in Q3 compared to last year. But in the first 9 months, sales have increased 23% for annuities. It's amazing. And I've had a lot of folks say, well, yeah, I mean, MIGAs have been really hot. MIGA multi-year guarantee products are where it's at. It's been, uh, interest rates were higher there at the beginning of the year. Well, MIGAs were up 18% in the third quarter. FIA sales, fixed indexed annuity sales, were up 54% in the third quarter. Fixed index annuity sales up 54%. So for that veteran agent or maybe that green agent listening that's only sticking to those MIGA sales right now, FIAs are where it's at. Clients are looking for them. They have interest in them. More information than ever is out there and available for them. FIA sales are just blowing up here. And Bill, I have, a few reasons why that's happening. I mean, really, three reasons why you're seeing this big growth happen in 2024. The economic conditions were kind of right for all of this, right? You had an election year take place. Hard to believe that all came and went at this point. I feel like there was an election going on for months and months and months here, and now it's already behind us. But you had a lot of uncertainty with that, right? And that's where people are looking for the safety and guarantees that annuities can provide for them. You have that need for income too. One of the most exciting things to me with fixed annuities is that ability to create that guaranteed lifetime income. And for the past few years here, income has been a bit of a side story where accumulation products have really taken off. Think about it, Bill. You've had a lot of products out there that were just for accumulation. A lot of companies coming up with 3-year and 5-year MIGAs for accumulation, and income was a little bit put on the wayside. Now, income is a big, big story. And you have a lot of people turning 65. The old number, 10,000 people a day are turning age 65. Well, what do they need? They need guaranteed retirement income. And with the interest rate environment higher than it was 1, 2, 3, 4 years ago, That income story has been a big reason why annuity sales have jumped up in 2024. And all of this is despite an interest rate roller coaster that's happened, right? You've had interest rates really high. I mean, there were annuities at 6% or more earlier this year. And then the Fed started making some decreases. And then I felt like even though the Fed was doing some decreases in rates here, annuity rates were still going up, which I thought was pretty interesting. And now they've kind of leveled off, but there's still some really solid rates out there in multi-year guarantees and income payouts. So when you take those pieces together, 2024 was an amazing year because of the right economic conditions, that need for income, and then that interest rate roller coaster that also created some uncertain economic times, led to some really high interest rates out there.
Mm, very, very interesting. It's been when you look at a graph, and I saw this on Limra's site. And by the way, anyone can look this up on Google, but when you look at the look back and the charts of FIA sales and even income riders recently, it's just astonishing. And that's what I was saying earlier, like as an agent, as a financial advisor, just get your arms around the basics, know enough to be dangerous, and you'll be part of this movement. I mean, it's just insane. And again, the proof is in the pudding. So definitely the place to be.
And
Um,
Bill, you said
yeah,
something
tell
great.
me.
Like you can look up these charts. And clients are able to look up this information, So as an agent, you have to have some experience in what's happening in the market. You have to keep up with that information as well. Even if you're not securities licensed, you need to know what's going on in the market day to day. You need to know what's happening with the Fed decisions for interest rates and to be able to create that urgency with your clients to look at the safety and guarantees that annuities can provide for them. So there's a lot of information out there. It's great to be on top of it because you and I both know clients can spend a lot of time looking at some misinformation there, and sometimes you want to right that ship and help get them in the right place.
That's right. That's exactly right. And yeah, especially when you think about a lot of these consumers, these prospects, walk into their bank, and they have a bank rep they speak to all the time. And, the rumors start flying because they want them in a certain product where they get paid a certain commission. And so, yes, you have to know the
Ah,
facts, and it's your job to clarify, the pluses and the minuses with these consumers. So yeah,
exactly it.
I love the Google is your friend term. All right, so let's jump into there's a lot of PR, a lot of news recently on the annuity space. Some not so great, some unbelievably great. So there's been, and I mentioned this earlier, we're coming full circle quickly here, but there's two carriers, I won't mention their names. So what happened is just recently they had a downgrade, and I mentioned this, but there in fact there's still lawsuits going on today. And what happened is red flags came up, right, for prospects, for agents. And they started to get phone calls from certain clients if they sold these products saying, oh my gosh, is my money safe? What if I make a withdrawal and am I ever going to see the check? Or so it caused a lot of attention, right? And in a not so good area when it comes to annuities. And I wanted you as the coach here, Chris, if you can just touch on this, and if we can tell the agents, what's important moving forward, what do they need to look out for so this kind of thing doesn't happen. I know it can't ever be 100%, but you can try to be 99.9.
Yeah, that's exactly it. It's never 100%. But to touch on that, there are some carriers out there just having some financial issues, things like that. There's kind of a he said, she said going back and forth between a couple states and a couple of insurance carriers and things like that. And it's interesting here since 2022, I want to say you've just seen a lot of pop-up carriers happen, Bill. I think you'll agree with that. Just some interest rate pops up in an email that you get. I'm sure a lot of folks listening right now have seen it. You'll just have some random name carrier pop up that you've never heard of before with this absolutely wild interest rate that's showing up. And you're like, wow, this is the best rate in the country. And it's available in my state and it's paying a great commission. And I have no idea who this company is. And I get those calls all the time from agents like, well, we need this company. We need company X because they have a 6% interest rate. Well, what I have to say about that, and I'll keep it pretty broad, but you want to be careful. You want to do your due diligence as an agent. You want to do that due diligence as an advisor, and you want to have that conversation with your client because, as you and I said, Bill, there's a lot of information out there. Your clients can find these rates pretty easily at this point. So they know what's out there, but sometimes you have to talk them down a little bit. You don't want to be a rate chaser, if you will. You want to get with a few carriers that you know are strong, have a history, have been around. It doesn't mean you should never sell some of these carriers that come around, but definitely do your due diligence in looking into them a little bit. Understand what kind of backing they have, even who's on the board of these companies. What kind of history do they have? If you find that they have some people that you've known from other carriers that were doing a great job at these other carriers and they took on this new opportunity and they're running this new carrier that's coming about, well, that could be a good spot for you. But you definitely want to do your due diligence out there and not be a rate chaser, if you will. And believe me, I know how hard it is that when you're dealing with MIGA rates and your client sees a 6% from a no-name carrier, and you really want to talk to them about that 5.5% at the A+ rated carrier, that can sometimes be a difficult conversation, right? But you want to have that conversation. You want to know what's available out there. You want to make sure that the client understands that there's always possible risks out there with those type of no-name carriers, or those smaller companies, or those new pop-up carriers, if you will, and to just make the best decision possible for them.
And what would you, Chris, if you were an agent out there today selling on the street, what would you say to look for as far as a rating? Would you, some people say B++ or better is fine, A- better is fine. What would you suggest?
The ratings are interesting, but there are really good B++ companies out there. There are some decent B+ carriers out there too. To me, you have to look at a little bit more of the picture with it as well. You want to
Yeah.
look at the solvency of the company. You want to look at their financial page that they create. As I mentioned, sometimes you want to even go as deep as looking at who works at the head of these companies. What's their history? If you see that somebody has a long history with an A++ rated company and just took on a new opportunity at this new carrier, well, look, if they have a good history where they were before and they have high integrity, they'll probably bring that on to this new carrier as well. So there's no reason to say, hey, this new B++ company came out of nowhere, but they're not A rated. I won't work with them. Not necessarily the case. If they have a lot of backing behind them, look at how much total investments they have behind them, look at their solvency, even take a look at, if you've been in the business a long time, you'll probably recognize some names on the boards of some of these new carriers too. So I like to take in all those factors when seeing who I'm working with. And
Yeah, yeah.
it even goes a little deeper. See how easy it is to work with them, because sometimes these smaller carriers, they really want to show out and they put service at the top. And if they're easier to work with, great communication, and they have some great integrity and backing behind them, hey, they could be a great option for you to work with too.
Yeah, and I would say another just a little tip is make sure, and you have to check with your E&O provider, but make sure that your policy covers a B+ carrier or better, or A- or better, whatever it is. So
Definitely.
I've heard about certain policies not covering certain carriers depending on ratings. So that's another thing that you wanna look out for.
Exactly it. You bet. And
Yeah.
look at those ratings too, if they're stable or if they're on a positive outlook, because you might have a B++ carrier, but if they have a positive outlook, they could be having a rating increase soon. I just saw a couple of carriers have rating increases just in the past 2 weeks. So that's great news. And if you have your client with a B++ carrier and you can go back to them and say, look, their rating is now A- or A, that's a great call and a great annual review to have with your client too.
Yeah, yep. Love that. Love that. Speaking of calls and annual reviews, and I know replacements is a hot topic, right? It's been going on for a while, and you always want to do the right thing and make sure that you're doing the correct due diligence, looking out for the prospect, the carrier, and it's simply the right thing to do. What would you say to look for when you're going back through your book of business, Chris?
Yeah, I mean, replacements are really huge right now. And I'll say this, replacements can sometimes be a bad word. I've worked with some agents who have 20, 30 plus years in the industry. They're 10, $20 million a year producers. And you'll say the word replacements and they'll get a little bit uneasy with that conversation. But the truth is, right now, replacements are a huge, huge topic. And if you do calls with carriers or see some emails coming from carriers, they're talking about them as well. And the reason is because revisiting your book of clients, looking at the annuities you've sold, even just in the past 2 years, you may be able to offer your clients a much better position. And replacements are really the reason why. Think about it for a second here, Bill. You have a very low interest rate environment that was taking place in 2020, 2021. All of a sudden, you have interest rates just shooting through the roof. What if you sold somebody an annuity in 2020 or 2021? Well, now they're at a disadvantage compared to these current products that are available today. Now, with old annuity suitability rules and things like that, a lot of carriers were hesitant to change out and replace these annuities if they've only been around for 1, 2, 3 years. But now those rules have really eased up quite a bit because you can get your clients in such a more advantageous position with these higher interest rates and these new products. And really, it kind of comes in three different varieties, Bill. Like, let's say you're looking at income annuities. I have actually a couple personal sales stories that go along with this. Think about income annuities. Let's say you sold a client in a fixed index annuity with an income rider in 2020, and it paid out a certain amount of income. Well, if you look at that same product with today's products, you're going to have much better income, probably a higher premium bonus, and absolutely higher crediting rates like your fixed rate, your S&P cap, your S&P participation rate, your monthly average indexes. All those things have increased since 2020. So if you as an agent can look at that old annuity, say, "Hey, I'm getting my client better income, I'm getting a premium bonus with it to make up for any of the surrender charges, and they're getting higher rates and caps," you're going to be able to move that annuity. Now,
Hmm.
that's a better position for your client. That's another sale for you as well. And you're helping your client out on that annual review. If you have sold income annuities in the past 3 or 4 years, you need to revisit every single one of those sales because you can easily have a conversation where you're putting your client in a better position with rates, with income, a higher premium bonus there as well. It's a
And
great conversation to have.
yeah, I love that. It's on the life side, it's just similar to a term policy holder, and now you're revisiting to talk about conversion and doing the right thing.
Exactly it. That's
Yep.
exactly it.
Yep,
And
yep. Now, let me ask you just a quick question. What is the carrier, what and suitability? What do they look for to make sure that hey, we don't have to dive in real deep here, but just for the agent out there that says, "Oh, I have a few of these I wrote, 3, 4 years ago." What are they looking for on the carrier side?
yeah, great question. And if you haven't been visiting this, it's really changed. A lot of carriers would say to you, "No, you cannot replace an annuity that's only 2 years old, or it must be at least 3 years old and follow certain criteria." Bill, I have seen replacements happen. This is going back to that personal story I mentioned as I started talking about income annuities. I got one moved with an 11% surrender charge to it, and it was under 24 months old.
Oof.
11% surrender charge under 2 years old on the issue date. Why was I able to do
Unbelievable.
that? The income was better with the new product, and the premium bonus made up for most of that surrender and was able to
Wow.
move it. So it
Unreal.
is case by case. That's why, Levinson and Associates has an amazing team for folks to call into to ask questions because carriers will be different with that. But don't go into an appointment thinking, "Oh, you bought an annuity just 2 years ago. There's nothing I can do with it." That's not the case anymore. There is something you can do with it now. And it even goes beyond income annuities. If you sold an accumulation annuity, there are big premium bonus products out there. Bill, there's premium bonus products out there now with 16% premium bonuses with no fee on a 10-year
Wow.
chassis. You know,
Unbelievable. And that's used, well, you can use that bonus to eat up the surrender fee or most of it or part of it,
that's
which makes for a
exactly it.
win-win. Yeah.
That's
Yep.
exactly. And because of this higher interest rate environment, they're able to provide products like that. And you might be thinking, if you're a seasoned veteran, that I guess the rates and caps are awful on those products. They're really not. I mean, they're going to be lower than a product with no premium bonus, but there are some fantastic options out there, even with products as high as a 16% premium bonus. And
Love it.
it and the conversation even extends to MIGAs. MIGAs were kind of that big no, you really can't move them. Wait until the end of the term. Now today, carriers are saying, hey, if you can bring that annuity whole in the first 12 months, then you can absolutely move it. Meaning that if you sold them an annuity in 2024 or 2022 at a 4% interest rate for 5 years, and now you have 5.5 available, that makes that annuity whole in the first, because of the surrender charge, makes the annuity whole in the first 12 months. You can move that annuity too. So don't think you can't move a MIGA. There are options to move multi-year guarantee annuities, accumulation FIAs, and income FIAs right now on every single visit you have with a client.
Wow, that's a huge opportunity. And then after a year, typically there's no chargeback of commissions. What, 12 to 18 months on the norm?
That's exactly it. Usually 12 months. There are some rare products out there with 24-month chargebacks, but you'll know those that are out there, or sometimes they go to a 50% chargeback after just 6 months.
Yeah, yeah. So
Yeah.
this is where you need to lean on our team between Josh, Ashley, RJ. We're here to help you and answer these questions. And we can definitely dive in deep. Today, I'm trying to keep this light 100-foot overview just to give you enough nuggets so you're dangerous for the new year. But I wanna let's just switch gears for 1 second. And by the way, I know we're getting a little deep here. We're gonna, in a few more minutes, we're gonna switch over to more of a 101 for some of the newer agents as well. But speaking about MIGAs, this is also coming up a lot from agents, and they're asking these questions. With the MIGA rates dropping due to Fed cuts, is indexed FIAs a good option for clients looking for a higher, better return? What's your thought on that?
Absolutely. I felt like at the beginning of the year, MIGA was the name of the game. And who could blame clients for looking at MIGAs more so than index annuities when interest rates were at 6%, right? For a lot of these multi-year guarantee products. I mean, you're going to tell a client, hey, get 6% guaranteed each year for the next 10 years, or maybe you'll get 9% if the index performs correctly, something like that. No, my clients were really looking at multi-year guarantees in 2023 at the beginning of 2024, but you have had those rate cuts happen now, and that has changed the ball game a little bit. Um, what's interesting about those Fed cuts, it's kind of been that annuity interest rate roller coaster I was talking about. You had interest rates drop. I see interest rates with these MIGAs now in the 4%, which you haven't seen in a little while. Everything seemed to be over 5%. I've seen some in the 3% now. And that's opening up that fixed indexed annuity conversation. We just talked about 16% premium bonus products available. You have products with 15% caps to the S&P. I mean, there's some outstanding options for growth out there right now in fixed index annuities. And I think the proof is in the pudding when I talk about those Q3 numbers, right, Bill? I mentioned FIAs in Q3 were up 54% versus MIGAs in Q3 up 18%. Everything is still up, but Q3 was a really good indicator that some rate cuts have happened and everyone is looking for fixed indexed annuities again. And whether you like premium bonuses or hate premium bonuses, there are some fantastic options out there with some really good rates. If you're looking at the right carriers, you're going to have some outstanding renewal rate integrity too. I know Ashley and Josh, they know all about that the renewal rate options and the integrity of some of these companies so that your client's not going to see a 15% cap drop to a 10% cap the next year or something like that. So a lot of solid options out there. I think FIAs going into 2025, I think that number is just going to continue to grow, both for the income fixed index annuities as well as the accumulation ones as well.
Yep. No, I totally agree. I'm glad we touched on that. Let's switch gears for a second and move into hybrids. So this is also coming up a lot recently, especially, the years of a competitive standalone LTC policy are pretty much gone, right? There's only a couple options left. And I want to talk about annuities with LTC riders or hybrids, if you will. What are the hot products, hot carriers? What are you seeing right now? What's your thoughts on this, Chris?
Yeah, Bill, this is one of my favorite conversations to have, actually, about long-term care. I think everyone has a personal story with long-term care, or we know someone that's had to go into a facility, or, uh, I know my wife's grandmother, she did home health care, and it cost $10,000 a month. And this was in a small town to be able to do that. $10,000 a month. It's a good thing she had 10 kids to help out with that. But $10,000 a month, that's a huge expense for any family. And that's why this conversation is so important. The month of November was Long-Term Care Awareness Month. And a big conversation I saw out there in the industry was hybrid LTC with annuities. Hybrid LTC with annuities. And Bill's right. There's only a few options out there today for that traditional long-term care. So seeing these new options pop up are so exciting. Bill mentioned talk about a few carriers or products. I mean, let's keep it broad here. There are annuities where if your client has $100,000, they can drop it into an annuity LTC hybrid product, and immediately your client gets 4 times their money. 4 times their money. That $100,000 turns into $400,000 in a pool of long-term care money for your client. It's an outstanding, outstanding conversation to have. Everyone understands that too. And because it's a long-term care annuity product, the underwriting is so much simpler than if it were a life product. And those aren't bad options too. There are some hybrid life products as well. But to keep things very simple, those LTC annuity products, the underwriting is easier. Usually just a list of questions, sometimes as few as 5 questions to get a client through. I mentioned 4 times benefits on your client's money, usually with minimums around $20,000 to start. I just use that 100,000 to make a nice, clean, easy figure there. There's a new product on board, and I'll name this one. It's the Equitrust Bridge product that's available. It has guaranteed long-term care available for your clients, regardless of their health. That is an amazing conversation that you can have. So if your client is a preferred health risk, they can get 3 times their money. They put $100,000 in. It is now a $300,000 pool of guaranteed long-term care. If they are more of a standard risk, it's a 2 times benefit. That 100,000 turns into $200,000 of guaranteed long-term care. But let's say their health is poor, or maybe they've been declined. Maybe they got declined by New York Life's long-term care product. Maybe they got declined by Mutual of Omaha's or one of these traditional carriers is all I'm saying. Maybe they've been declined out there. The Equitrust product with the secure underwriting class will take anyone. And it grows at 140%. So your $100,000 turns into a $140,000 pool of money for your client, guaranteed long-term care. And the reason I like that product a lot too, it's on a fixed indexed annuity chassis. So the long-term care portion is guaranteed. I know folks might hear fixed index annuity. No, the long-term care portion is guaranteed, but your client's real money can still grow in an index. So at the end of 10 years, 15 years, they've had that annuity in there. They could have a significant pool of money that's grown with the indexes in this fixed indexed annuity. And that gives your client and their family so many more options in the future too. Yes, I think, Bill, that hybrid long-term care has to be a conversation. If you're an advisor on this call and your focus is selling securities and maybe throwing in annuities in there, if you are not talking about long-term care along with that, then you are definitely missing a huge hole in your client's finances.
Yeah, and not doing right by the client as well. I mean,
Absolutely.
it's your job to bring these things up. And some of these products have full liquidity in year one, year two, immediately. It's unreal. So it really is it's a win-win-win when you bring up some of these hybrids in the
You're right,
annuity
Bill.
space.
Some of them have return of premium too. So, hey, what
Yep.
happens if I change my mind or I need the money? Yeah, that's available for them as well. Just an amazing conversation to have when you're mixing in the hybrid annuity long-term care.
Love it. I love it. Okay, let's I want to switch gears again, and I know we kind of did this in reverse, but I want to just kind of talk about some of the 101 annuity basics that newer agents need to know. I don't want people listening to this and saying, "Oh my gosh, we're talking about surrender fees and withdrawals and I don't want to get a chargeback." And it sounds like there's too many moving parts. And the answer to that is no, there's not. And when you have a good team, and I mentioned it earlier, depend on the team, rely on us. Go out there, bring it up to your clients. As soon as you have a guy or girl, let us know, and we will do everything behind the scenes for you. So what I want to talk about, and I want Chris to jump in here, is knowing enough to be dangerous when it comes to selling and marketing annuities. So if we can just kind of simplify, Chris, in a perfect world, you're an agent out there in the trenches, Cedar Rapids, Iowa. Who are you looking for? Who's a good candidate for an annuity sale in general?
Absolutely. I mean, annuities have always been tied to the senior market. This is a senior market product, and it makes sense when you think about it, right? These are products that offer safety and guarantees for your client. And if your client's in their working years, they're working, they're saving, they're putting money away, they've been involved in the market. If you're 35 years old and the market drops 20, 30%, you can handle that, right? I mean, you're still working, you're still putting money away, you have time to recover those types of losses if something like that takes place. But if you're 65, 70 years old, and the market drops 20, 30%, that's devastating, right? I mean, that's a huge hit, especially if you were really relying on that money for retirement. If that was your nest egg that you were going to take an income off of, whether you're doing the 4% rule or not, or the way you're taking that money out, that is a massive, massive hit. So these products really are still looking at those age groups of really 50, 55 plus when you're talking to clients, because that safety of principal, that guaranteed lifetime income, your clients at that age, when they're looking to stop working, they're used to getting that paycheck every 2 weeks and suddenly that stops. They need that safety and guarantees that the annuities can provide for them more than anyone. Now, with that being said, I don't think you should close anybody off at the same time. Being in this industry so long, I have seen younger and younger clients purchasing annuities, and it's important to hear out their needs and see exactly what they need out of these products. You may have a conservative client who inherits a large sum of money, and they want to put some of that money away into something safe, maybe something outside of the banks. I have seen a lot of that happen here. And that's where your multi-year guarantees really come into play, or your fixed index annuities, maybe without a premium bonus, that offer excellent growth long term. Remember, a lot of these annuities can be sold from age 0 to 80, some 0 to 90, some 0 to 100. So you have all age groups at your disposal here. Best to hear out your client needs as people getting involved with these products are getting younger and younger.
Yeah, love that. And think about all of the senior market agents out there. I mean, your book of business, I mean, I would tackle that and have, either a CSR rep or an admin assistant put a little pitch together. But that's prime time. The seniors, like Chris mentioned, 60, 65, 70. I mean, that's a perfect conversation. And we have those door opener scripts for you as well, that would, in fact, we can send those out. If you reach out to us, just let us know. But we have a nice turnkey package we can email out. I love that, Chris. That's a perfect explanation.
And
And then you're
Bill,
right. Yeah, yeah. Tell me.
I would even jump on top, like if you are a Medicare agent and you have that book of clients, if you've been in this business for 10, 15 years, you probably have 2 to 400 clients. What a warm book of people to reach out to about these products. And while index products can get a little more in the weeds, those income annuities, those long-term care riders with annuities, you don't even have to talk about that. Keep it simple. Everyone understands 5.5% for 5 years. Every single person understands that with a multi-year guarantee, right? So you can get these folks on the line, on the hook with text message marketing or email marketing or somehow reaching out to your clients, getting that CSR involved, like Bill just mentioned, and talking about those multi-year guarantee rates. They are exciting right now. They're doing better than these savings accounts that are out there for a while. Those were real hot. That's just an easy conversation that everyone can understand. Great way to attack it.
Yeah, yep. I love that. And then at the same time, we're talking about the senior market, the Medicare agent, but we also had a prospect a few months back who got that large inheritance in his low 20s and wound up putting a few million into, I think it was two or three different products. But you just never know. And again, just pick up the phone, call us, and then we can discuss suitability, if it's a good fit or not, and move forward. I know we're talking about the basics, and I love how you're keeping it simple, Chris. It's very, very helpful for some of those that are newer to the annuity side. If we turn it up a notch and we talk about some of the basic riders available, can you give us the 100 foot on the annuity riders that are available today or that are
Oh,
more common?
absolutely. That's the exciting thing about these products. And I'll start with this. Still to this day, I was just with family. We did like an early Christmas with my wife's side of the family, and they're asking me what we do. And I told them annuities. And all of their minds immediately go to SPIAs. That's just ingrained in most folks, right? They think immediately, oh, immediate income, or they've seen those really good New York Life commercials with I forgot that guy's name, but he sings a song
Yeah, yeah,
about immediate income, and it's very catchy, and it's gotten actually a lot of people talking about it. Lou Bega, that's the guy.
yep, yeah, yep, yep. I remember.
A great commercial, and it's stuck in their minds, but they think immediately, oh, annuity equals immediate income, SPIA product. Okay, well, I don't need income now, so I don't need to have this conversation. Well, it's really not true. And it's not true because of the accumulation products that are available, the income for later conversation, the hybrid long-term care annuities. I mean, when it comes to riders, you have so many features. I'll highlight just a couple here. There are death benefit riders available. Let's say you have a client who is not really interested in keeping the money for themselves. Maybe they want to just leave this to somebody. There are death benefit riders in there that will grow the death benefit at a guaranteed interest rate that will ultimately go to the client. Where that's great. I know the folks at Levinson and Associates, a lot of life insurance sales take place. Maybe somebody can't qualify. Maybe they're older and they just can't qualify for life insurance or health is poor. Consider death benefit riders. It guarantees that there will be growth to the death benefit, even if the indexes don't perform that well. That's been a very big conversation. The long-term care piece or the income doublers with index annuities with income riders. Did you folks know that with a lot of these income riders, where your client's getting a guaranteed income, you can get your income to double if you're unable to complete 2 out of 6 ADLs or go into a nursing home? So if your client's going to get a guaranteed, say, $15,000 a year out of this annuity, if they can't complete 2 out of 6 activities of daily living, that income will be $30,000 for a period of up to 5 years. Folks, that's money when your clients need it the most. And that's built into many of these products that we're talking about now. So if
I
you have, go
yeah,
ahead, Bill, I'm
sorry,
sorry.
Chris. No. You keep going. No problem.
Yeah, those doublers have been such a great conversation. Like, listen, I need long-term care, but I can't qualify for anything. Well, do you need an income right now as well? Those are a great option. Another thing that's really popping up too are these premium bonus riders that also offer more liquidity. Let's say your client just wants a larger premium bonus. You know, I mentioned 16% premium bonuses out there. Folks, there are 20% bonuses. There's 18, 20% premium bonuses, sometimes 25% premium bonuses available with additional riders that you can add. That way your client gets a guaranteed 20, 25% to their real money. And on top of that, it offers more liquidity. If they want more than just 10% free withdrawals, a lot of these riders will give them 20% withdrawals or cumulative withdrawals up to a certain percentage. And some of these even offer return of premium after a certain amount of years. So if your client's concerned about getting their money back in case of an emergency, it offers that additional liquidity with a higher premium bonus. That's become very popular here in 2024. So whether your client's looking for long-term care features, death benefit features, or a bigger premium bonus and more liquidity added to their annuity, there's a lot of really good riders on top of just the normal SPIA or fixed index annuity that's out there.
Yeah, love. And now you're seeing too for the audience that we can take this as deep as you want, or keep it more on the shallow end. And
Exactly.
what I would recommend, right, is to keep it simple, stupid, right? Especially if you're newer at this. And you have a few weeks here, or at least 2 weeks of vacation time, or even the weekend where we're doing your walk around the block in the mornings. But in fact, this is one of my favorites. We have an 8-week workshop that we did just focused on annuities from A to Z. We talk about all of the riders, all of the perfect type of prospecting, and who would make for a good candidate, and marketing platforms, products, carriers. We dive in deep. That's complimentary, and you can listen, you can watch, totally up to you. It's on our website. We also did a training dashboard. It's an Annuity 101 dashboard where you go through the entire course and then you get your certificate at the end, and then you become a annuity sales professional by the time you finish our course. Also complimentary. So these are things that you should leverage and get comfortable with some of the terms, the lingo, what annuity and what rider is best for which client that you're working with today, or whatever the case is, but know enough to be dangerous. I think we made the point a few times. I want to shift gears here. We're almost done, by the way, just a few more minutes and then we'll put a bow on this. But I think this is another important topic question that comes up all the time. If you can dive in a little, Chris, is taxing, right? And what can you suggest when it comes to taxes on annuities? Obviously, we recommend the agent or client talking to a CPA. But what are some of the simple suggestions you can throw out there for the agents?
Yeah, I mean, look, we're going to keep it very, very simple here. You know, you need to be aware of taxation with these annuities. You need to know one of the most powerful benefits of annuities is that ability for tax deferral, right? I mean, that's such a huge, huge benefit for your clients. Did you guys know that if you have a CD paying 5% for 5 years and you have an annuity paying 5% for 5 years, you're actually going to have more growth in the annuity? And the reason is because with a CD, you have to pay taxes on the growth every single year versus the annuity and that power of tax deferral. You're going to have more growth because you are just compounding interest on top of interest on top of interest on top of interest every single year.
Hmm.
That is one of the most powerful stories, and to reverse it a little bit, I love to talk about what these products will do, not what they might do. And what it will do is give your clients that power of tax deferral. One thing you want to be very sure of when you're talking to your clients is whether something is qualified or non-qualified. Is the money qualified or is the client's money non-qualified? That's a huge taxation conversation to have. And it's really not that complicated. You have qualified money that's in employee retirement accounts. Think 401ks, IRAs, SEPs, those types of things. That's pre-tax money, meaning it's never been taxed before. And then you have your non-qualified money. That's after tax money. That's like money sitting in savings, checking accounts, mutual funds, that type of thing. After tax dollars.
Hmm.
Make
Okay.
sure you
Yeah.
have that distinction between qualified and non-qualified money. And then once you find out whether that money is qualified or non-qualified, talk to the folks at Levinson to be able to put the product into the right place. And remember that any gains on that non-qualified money would be taxable at that point, right? So if they put in $100,000 of non-qualified money into an annuity and it grows to 150,000, well, only that 50,000 is taxable at that point. And it all
Yeah.
works on a LIFO, last in, first out. That's how it's taxed. I don't want to get too in the weeds, but that qualified, non-qualified conversation of finding out what your client's money is going to really help that conversation out and help put that product into the right place for your clients.
Yeah, that's very helpful because that question is going to come up to our agents. So you need to know enough just to be dangerous, keeping it simple, stupid, like we say. All right, Chris, my second to last question here. Um, you're at a holiday party, right? And, the next week or two, whatever it is, New Year's party, and obviously you're an insurance agent or a financial advisor and you just meet someone for the first time and you're making introductions and they say, what do you do? Introduce yourself as a life and annuity agent. And where would you go from here when it comes to bringing up the annuity product or sale? How would you pivot? What would be the best way to tap into this?
I would make sure that, it's funny to me. Annuities used to be a bad word, right? I feel like if you mention the word annuity on the golf course or at the holiday party with a random person, they might have had a negative story about, oh, my uncle got a product and they couldn't get his money and no, he couldn't do that. I feel like consumer sentiment has really improved on these products. Absolutely. I think these products offer so much value that you absolutely have to bring up that you have this ability. I said earlier, Bill, that everyone understands, hey, I got an annuity that can pay you 5.5% for 5 years, guaranteed. I mean, that is such a powerful story. I have a product that offers you 5.5% guaranteed for the next 5 years. And you have that benefit of tax deferral that's there too. If I'm talking to someone, I'd like to tell them that, yeah, I work with products that help secure a guaranteed retirement for clients. Like guaranteed retirement, well, how's that possible? Well, I do it with fixed annuities. And I
And
would
then
go into that conversation.
you get to tell me more.
You get to tell me more. I offer security and I offer guarantees for clients in retirement. How do you do that? And that's where you get that tell me more. And you want to keep it very simple at that point. But you have those guarantees. And like I said earlier, you like to talk about what the product will do, not what it might do. What it will do? Well, yeah, I offer products that give a guaranteed lifetime income. Guaranteed, never to change. They have a death benefit to them. They offer liquidity as well. And they have the benefit of tax deferral at the same time. Wow, tell me more.
Yeah, it's really nothing to lose at the end of the day. With some of these products, there's not zero to lose.
Exactly it.
Yeah.
That's
Yeah.
exactly that safety of principle, such a huge, huge benefit with these products, and it just makes it easy to talk about too as an agent and advisor.
Yeah, another good point. I was just thinking about this. There's just under 1 million agents in the country, and there's a lot of them, right, are focused on some of the low hanging fruit type of products and sales, final expense, more health products, let's say. And think about the competition on the annuity side, right? Or in this part of the industry. So that's another great reason for you to sit up, maybe pay a little more attention, learn a little bit more, and bring these things up. And another huge thing, which I know we didn't talk about much, but the commissions are huge. And if you're a life agent, you're focused on, IUL sales or whole life or the monster term case. If the client is middle-aged to upper age and not so healthy, you have 4 weeks, 6 weeks, 8 weeks of underwriting still with medical records and this and that, right? This is something that you put in an e-application, and if everything it checks out and goes through suitability, okay, you're paid within a week or two and you're done. There is no underwriting.
That's
So
right.
you this is a great way. Number one, take it serious. Number two, supplement your income for the new year. And then you never know. You could have this shift where next thing you know, you're focused more on annuities than the life side, or a little bit of both. So anyway, just be open-minded. That's the point of all these episodes and bringing in all these professional guest speakers, depending on their arena. And that's what Chris brings to the table on the annuity side. That was the entire point of this last hour. Chris, and I want to talk about this for a second. And we have over 100 carriers. We this on the annuity side, we have over 30 carriers. So I want you to suggest just a few carriers, but I also want to talk about one newer carrier for us, for Levinson, that we are launching. In fact, the official carrier and product launch, write this down, is on January 2nd at 2 p.m. Eastern time with Ibexus. So you can, in fact, register now, RSVP to the event. Make sure you're on. We'll send it out to all of our Levinson agents. But there's a reason why we picked an annuity carrier for the first webinar of 2025. Okay, is because we believe in this. We know it works. We see what our annuity agents are doing on that side, and you definitely got to get more involved. Chris, I'll give you an opportunity. Can you just name a few of the hotter carriers and products, if you don't mind? And then just my final question is closing comments, and we are done.
Yeah, I mean, that's exciting what you're doing with Ibexus there. They've been an interesting one. They're an A- rated carrier, a little newer on the fixed index scene, but they have really jumped headfirst into this. And what I like so much about what Ibexus is doing are the options for your clients. It's outstanding. They have a 5-year, 7-year, and 10-year product on the index side. And what's so exciting is their premium bonuses. You have an 8% premium bonus on the 5-year product. Folks, think about that. 8% premium bonus on a 5-year fixed indexed annuity, on top of possible growth credits too through the S&P index and some other proprietary indexes. They have an 11% bonus on their 7-year product and a 16% premium bonus on their 10-year product. I mean, that is really, really exciting stuff with an A-rated carrier, great financials. What I like so much about Ibexus too is that it's all e-application. So it's a very easy e-application process, and the communication is outstanding with them. I always get emails on their SLAs, on how long it's taking in the new business, how long things are taking in suitability. It's been a very smooth process with them, even as they were starting things up a few years ago. So really exciting stuff there, Bill. Glad you guys are diving in there with that one. That's exciting. As far as other products, other carriers, things like that, I mean, what's so nice about the folks at Levinson Associates, they have the ability to spreadsheet so many things for you, whether it's MIGAs, income products to see who's going to have the best income. I have seen for income products, since that's been such a hot conversation right now, you've had some carriers that have consistently been at the top this year, like American Equity, F&G, Fidelity and Guarantee, and Equitrust. I mean, if you're looking for income immediately or 10 years from now, those 3 carriers have been doing a fantastic job of providing some options there. And what's really nice about those carriers too is they all have those long-term, those long-term care features, like the income doubler to your client's income if they can't complete 2 out of 6 ADLs. And more than ever, your clients are looking for more, right? They're not just looking for a product that just does one thing. They like that it has the ability to grow their money, but it also has a guaranteed income. And on top of that guaranteed income, they have a product that also can double that income when they need it the most, when they're in a nursing home facility or they can't complete 2 out of 6 ADLs. Those carriers have been knocking it out of the park with those features. And think about it. If you're talking to somebody and you're head to head against another agent or advisor and they're offering a really high income product that doesn't have one of those features, you're going to win that every single time, even if your income isn't as high. So that's been a great conversation, Bill, and a few solid carriers to look at here going into 2025.
Fantastic. Fantastic. We appreciate that. And my final question here for you. I know we're into sixth gear now, but
Love it.
closing comments, suggestions, anything to help our audience move the needle in 25 in the new year. What can you leave everyone with, Chris?
Yeah, love it, guys. And this has been a lot of fun, Bill. A few things I would always say is you always have to keep that pipeline full, no matter if you're a new agent or if you're a seasoned veteran in this. You always got to have that pipeline full. It's why Bill and I brought up right away. If you're a Medicare agent and you're sitting on 200 to 400 clients and you're not talking about fixed annuities, you are just leaving a huge opportunity on the table. I know there are rules and things like that that you have to follow when communicating with these folks, but if you've had these clients on the books for a while and you're not talking to them about fixed annuities, this is such an easy conversation to be able to open up with your clients. And then you have the backing of Levinson and Associates behind you to help you out with that conversation as you dive a little bit deeper. So always keep that pipeline full with constant prospects. I think when it comes to another piece of advice, and I've found this out with a lot of agents that I'm working with, even agents who run leads. There's a lot of lead programs out there. There's lead programs people do now where they pay $350 per lead, which is a huge, huge number. And even then, you have to know that you are not the only agent or advisor that that client is talking to. I feel like one thing Bill and I have said this entire time is that clients have more information, more access to information than ever. Sometimes a client will bring a rate to me that I've never even heard of before. I'm always surprised. So you have to know that you are not the only agent they are talking to. And that is why you really have to diversify yourself and offer the best options for their situation. Offer the best options. That's where these folks here can help you out. That's where they can help create the best options for you and for that client to tailor make it. I have seen so many times where an advisor has offered higher income or a better interest rate, but the advisor that they were talking to, on the other hand, really tailored the options to them, really put their focus at hand, took care of them, and knew that they would be there in the long run. And they ultimately go with that agent advisor instead. So know your options, know what's out there. There's access to so much information. Bill has so many tools at his disposal to be able to help you.
Yeah, this was perfect, Chris. Spot on, as always. Just enough for everyone. Chris comes on here, and I ask him to do this, obviously, and he does us a huge favor, especially around holiday time. He should be with his family, and he's spending an hour with us. So, number one, Chris, I just want to say a heartfelt thank you to you. I hope you have a wonderful holiday season, a Merry Christmas with your family, and just really thank you again for trying to help and teach our agents in selling annuities the right way. I really
Bill.
appreciate you.
Hey man, this was a lot of fun. I really appreciate it. And these products are fun. Talking safety and guarantees with clients, this is easy. This is fun. And I love talking about it with you and anybody on here who's listening. I really appreciate having me here.
Awesome. We appreciate you. And I'll end with this. If everyone wants to write this down, we have our annual Agent Expo Thrive in 25. So write down this date, April 11th, 2025. And what's unique about 2025's Expo, it's the first time we're going to have 3 annuity carriers. We have an annuity keynote speaker already lined up in the agenda, which we've never done before. So you could see we're making a huge push on the annuity side now and in 2025. Happy holidays to each and every one of you. Happy Hanukkah, Merry Christmas, Happy New Year, all the above. We will see you again in early January on the next Levinson and Associates webinar on the 2nd. Thank you again, everyone, and great selling.
Thank you for joining us for the Bill Levinson Experience. Please feel free to share this podcast with anyone you think would be interested. You may also visit levinsonandassociates.com and all of Bill Levinson's social media pages for more information.